Let me kick it off with this chart, which, in another way shows the strength that we've seen, the rebound, if you will, in the greenback. We've seen the DMA, the 50 DMA for the first time since July's slump, and the dollar sitting above that now. So, how difficult does it make it for some of these trading pairs? I know you necessarily probably don't focus on emerging markets, but certainly in a lot of ways that divergence and the gap is growing.
Yeah, and I think a lot of it comes back to the resilience of the US economy. So about a week ago we had the GDP for the second quarter, which was stronger than expected. But recession talk is really fading in the US, and while they've clearly signalled that they're probably not going to go in September, they're keeping an open mind. The markets think they probably won't. The risk is still there that the economy ends up being more resilient, and that lends support to yields, and that does put pressure on emerging markets and other currencies where, say, the Aussie dollar, where rates appear to be on hold for a while. So it's a second win for the US dollar. We don't see it going back to where it was last year,
right.
But it's definitely actually on pretty good footing right now.
Yeah, our previous guest calls it the sort of nirvana trade, like the assumption that you get sustained disinflation without the labour market taking a knock. Is it kind of really tantamount on that being able to materialise in the longer term?
That would be very helpful. Yeah, I mean, that would essentially, if you're betting against the US dollar, as a lot of us have been for the past 6-12 months, you're counting on the Fed starting to ease, and once it does, that the US dollar loses a lot of support and people look for where the better growth stories are. But if growth is resilient, inflation comes down without really crunching the US economy, then that is a pretty good situation. You may still look for other currencies to diversify, but it's hard to be super bearish the US dollar if that is that sort of Goldilocks outcome.
What's driving the Japanese yen right now, especially when you have the 10-year yield continuing to really be pushed higher? Are you expecting the BOJ to step in again?
Yeah, look, that is a very good question. So we did think that what the BOJ delivered last Friday was yen supportive. It was very messy trading on the day, though, and obviously we had bouts of yen weakness. There must have been some hedge funds, I would say, who were betting on a very major change. But to us, it is very significant to raise to 1% on the top side for the 10-year. They'll remain in the market, keep the market honest. But the fact is they've set themselves that it's the 1.0 level that is the key to them now there, and that is a notable change, particularly if they keep underestimating the strength of CPI. So it is a sort of multi-week, month story perhaps for the yen to make a recovery, but for the most part we did see about 24 hours ago a little bit of support for the yen against the US dollar on the ratings downgrade, but while Treasury yields are trending back upwards again, that does suggest yen weakness.
You also say in your notes that you're short euro yen, short pound yen. This, of course, as we are headed towards a BOE rate decision as well. Give us a little bit of the background for your rationale here.
Yeah, we think that obviously the market's very divided on the pound near term. It's had a pretty good year overall. We do think it's getting pretty stretched on some of those crosses, whether it's sterling yen or sterling CAD. If we do get the 25 delivered, then obviously that would be a hit to sterling. We are seeing signs of inflation easing. Obviously the UK has had a horrible inflation run for the past couple of years, worse than pretty much any major economy. So you do want to see that improvement, but yeah, in terms of the shop prices and so on, there are signs that the price pressures are easing, and that will take a bit of pressure out of sterling. And the economy it's avoided recession, but it's still not tracking that well. So it just looks stretched to us.